Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope everybody had a beautiful day. And in today's markets, guys, well, we have a second beautiful green day in a row, and the bounce attempt by the bulls does continue. This is exactly what we were predicting on the channel at the end of last week in my Friday video, how we were coming into the first daily oversold conditions on a lot of stocks and indexes coming off their all-time highs, and that we were expecting a bounce. Now that the bounce is underway, it is crucial for us to measure the size of these bounces to see, are the bulls able to recapture some of the structure that they've lost over the past week, or will this just be a case of a dead cat bounce and the bears resuming control later on and rolling the markets down further? So in today's video, guys, we are obviously going to take a look at those technical analysis indicators and see what we can find in terms of who's in short-term control, the bulls or the bears. So we'll do our major technical analysis rundown in terms of our market indexes and our big tech names. In terms of macro data, we did get some services inflation data today. The Services PMI report came out. So we'll be taking a very brief glance into that and seeing if our sticky services inflation number has finally come down after really being one of the largest impact in our overall CPI increases over the last 3 months. That, and to conclude, guys, we are going to take a look into my portfolio and further see the trades that I have made today and the ones that I have closed since the yesterday's session. I'll quickly remind you guys, even though this is a very, very big week in earnings, I won't be doing earnings this video. I'll be putting out another video tonight covering a couple of the earnings that occurred today. So we'll be going over those in the later point video. So without further ado, guys, let's get right into today's video. So SPY up 1.19%, QQQ up 1.5%, and a very nice broad day of recovery across the entire market. Really no sector getting left behind. Take a look at the heat map. You can see that even better, not much red at all, except for maybe Walmart and Pepsi. Pepsi had earnings. It came down ever so slightly. The rest of the market, though, very, very healthy, especially some beautiful recovery in semiconductors, which were really struggling as of last week. Big tech performing very well on the day, and our two other largest components of the S&P 500, financials and healthcare, also having very nice recovery stories. So very stark contrast to last week, where this entire heat map was red virtually the entire week. In terms of the one-day relative performance, guys, you can see that really a case and point to the broadness of the market today. Everything coming into the green except for your basic materials, but a very beautiful recovery, especially in the names of technology, healthcare, and financials, your three largest components of the SPY. And now on the one-week relative performance, guys, we have flipped from red to green across a number of your different industries. The only remaining industry in the red over the last week and a bit is still technology, guys. Semiconductors and big tech names largely have not recuperated the losses of last week, even though we've put in 2 green days to start off this week. So the bounce does continues, but do the bulls have enough juice in the tank to convert these bounces into new daily uptrends? So before we get into more technical analysis, guys, I just want to go over briefly the Services PMI report that came out this morning. It gives us a good gauge into some inflation numbers. A quick reminder, guys, services have been the largest contributor to increases in inflation over the last 3 months, notably energy services and housing services. So now we have some manufacturing and services data from the rest of the economy. So let's take a quick glimpse into how those are doing right now. Now, moving into the Services PMI number, the consensus was for a 52, and we actually came in lower than that at 50.9, which does show a little bit of a contraction here in services prices over the month of April, which is a very, very good thing if you ask me, in my opinion. So let's take a look at those direct services numbers right now in terms of your Services PMI report that came out. And a few of the highlights, guys, we're going to go over these very, very briefly now. So rates of inflation generally eased at the start of the second quarter, with both input costs and output prices rising less quickly at the composite level. This is a very good thing. That said, manufacturing input cost inflation hit a 1-year high. So a bit of a mixed report as a whole. Let's take a look at some other categories right here as well. Some services providers suggested that elevated interest rates and high prices had restricted demand during the month. This is good, guys. It's very, very good. This means that services prices are starting to finally turn around and come over to the downside, as you see in this chart right here. After starting the year hot, I don't know if you can see this increase right here, started the year hot, and now finally we're coming down into the month of April. So meanwhile, manufacturers often linked lower new orders to inflationary pressures, weak demand, and sufficient stock holdings at customers. So that demand compression for both goods and services is now being felt across the board. That is good for overall inflation coming down, guys. The last thing I wanted to show you guys is this chart in more detail. So here we have your producer manufacturing index prices, your gauge of inflation for services. And as we can see, we started off 2024 really coming up January, February, and March. And now we finally have that downtick in the month of April. So we are normalizing in relation to prior to the pandemic. We're still above the pre-pandemic levels. However, it's nice to see that after 3 hotter than expected inflation reports, January, February, and March, at least now on the services side, our hottest indicator of inflation over the last 3 months, those are now coming down, which we talked about on the channel, guys. Usually services prices increase in the first quarter of the year as people raise prices. Keep in mind, think of things like insurance, right? Insurance or different subscription items that you may have in terms of services. Those usually come up the first quarter of the year and then remain flat for the rest of the year. So those services providers tend to just do those price increases temporarily at the beginning of the year. Then we have the same prices the rest of the year. So that's why we're now seeing those seasonal effects play out. Now that the first quarter is underway, nice to see a little bit of a decline. So hopefully this does translate into our May CPI number that's coming out in about 2 weeks, 3 weeks time at this point. So very, very good report as a whole, guys. It really helped bolster our bullish recovery over the course of the morning. And then the bulls just carried this trade into the rest of the day. Beautiful, beautiful move as a whole. So where do we stand in terms of our indexes now that the bounces are underway, guys? Well, it's very, very simple. Let's just run some technical analysis as usual. And we're going to start it off with the SPY. So SPY, we were always looking out in the context of this daily downtrend. And that the bulls have now started step number 1. Step number 1 was recapture the hourly uptrend. Once we recapture the hourly uptrend, we know that the daily bounces are now underway. And here we are, day number 2 of daily bounces. Now that's step number 1 for the bulls is now in their control. Step number 2 is we need to measure the size of the bounces, and the size of the bounces will let us know, are the bulls healthy enough to get a higher low and then reverse this into a daily uptrend. If the sizes of the bounce are not adequate enough, we can, probabilities wise, expect a little bit of a rollover. So where do we stand on the sizes of the bounces, guys? Well, let's put our fibs on this, and we can see now that our S&P 500 bulls have bounced 50% of this most recent leg of selling, which is a very good move. However, we're not out of the woods yet. For us to really get a high probability that the bulls can reverse this into a daily uptrend, we need to get the 618 or the 78% retracement to the upside. That would be 509.50 all the way up to about 513. If we can get in that pocket right there, that would put us up over and above this green box, which is now resistance. It used to be support back here. It's now resistance, and we have our moving averages there as well. So if we can clear above these, then it creates enough space, guys, to set a higher low. Anything above 493 pretty much, we'll just be looking for a higher low to try and make an attempt at resetting this daily uptrend. One thing's for sure, if we get back above these moving averages and back above this green box, it really gives the bulls a chance to use this area now as support and start reversing this, guys, and really start regaining some of these weekly levels that we have lost as well. So all in all, the bounce size is looking quite adequate right now, but we're not out of the woods. I'm still not convinced the bears are still in full control. We are eventually expecting the lower high, and then it'll be up to the bulls to protect these lower lows, set a higher low, and then reverse this into a daily uptrend. So the size of the bounce so far after 2 days of trading are quite adequate, but the bulls don't have the job done yet. We need a little bit more, give us a little bit more cushion, and that's going to really give us better probabilities of being able to reverse this. I still believe that this is the environment, guys, where we need to be very picky about the stocks that we are buying dips on. Only high conviction trades for the time being, because we do have a lot of earnings still over the next 2 weeks. We also have Jerome Powell next Wednesday commenting on interest rates, and we have an inflation report in the month of May that if it once again comes in harder than expected, it is going to take a lot of bullishness out of these markets in the short term. So please, if you are swing trading these markets, only do it with your most high conviction stocks. Moving on to QQQ now. So QQQ with a very healthy day of recovery as well, 1.5%. QQQ, however, has a lot more ground to recover than the SPY. So we are still in the context of this daily downtrend on QQQ right now, and your bounce is underway. The bulls have recaptured the hourly trend. So as long as this hourly trend continues to the upside, our daily bounce continues. Now, where are we coming into here, guys? I erased it yesterday, but let me put this rectangle back right here. So you will see that we are coming up into a key location similar to the SPY. This whole area above us right now is resistance. We have our moving averages up there, and 435 down to about 429. This green box right here is a very good previous level of support, which now is going to be unfortunately acting as resistance. So how much is the size of the bounce currently? Well, we can see right now that the size of the bounce is unfortunately only 38.2%. So not good enough to guarantee that the bulls have created enough space to really reverse this into a daily uptrend. If we were to reverse the hourly timeframes from here, the lower lows could be expected in terms of the probabilities. Now, where do we need to see the bulls bounce up to give us more confidence that they can recapture this daily uptrend? I would need to see a bounce, guys, at least to the 618 level. That would be about 433. If we can get up to 433, we may get rejected by the green box of resistance. We may get rejected by the moving averages, but it creates enough space that the bulls can potentially attempt a higher low and then go for the daily trend change. That would be the best case scenario. And also, that would do wonders in trying to reverse this current weekly downtrend that we're in right now. A nice weekly bounce like this may be just able to reset this into a new weekly uptrend further on in the month of May. Obviously, QQQ is beholden to a lot of very large tech earnings, and those tech earnings start tomorrow with Meta and continue on Thursday with Microsoft and Google, your very large players. So they will have a huge impact on QQQ's price discovery, either to the upside or the rollover to the downside over the next few days. So we will keep our eyes peeled on this one, but your bounces are definitely healthy as of currently. Now moving on to financials. So financials was one of these sectors that really ran ahead of the rest of the market in terms of the sell-off. They sold off first, and it was notable to us because they had held up the gains the best out of all of them. Take a look at XLF. XLF was continuously rising, even though the SPY was kind of topping out in March, and even the QQQs were kind of topping out and flat in March. That being said, financials, no, we're still in a daily uptrend, but when that trend reversed, we reversed hard into a daily downtrend. And now, right, you have your bulls. The first bulls to make their move to the upside was financials, and they are really powering through here, guys. So we are in the context of this daily downtrend right now. At any point, guys, we were always looking for the weekly higher low for further trend continuation. The bulls had never lost the weekly uptrend, which is why we still had a long bias on this trade. So moving on to the technicals, guys. The size of the bounce is crucial, and take a look at the size of this bounce. This is the type of bounce that I'm looking for. We are between the 618 and the 78% retracement, which really sets the bulls up nicely to eventually, when this move tops out, we are going to be looking to set the higher low into the daily trend change. The bulls have done a great job of creating enough space. We are now also back above all of our crucial moving averages, the yellow line, the 12 EMA, the 26 EMA in orange, and the pink line, which is your 50-day moving average. So looking very healthy. As soon as we start consolidating once again, I'll be looking for a higher low, anything above 39.50 to set the higher low to resume this daily uptrend and really start resuming this weekly uptrend as well. The banks, for the large part, guys, have recovered beautifully after their earnings crushes, right? JP Morgan almost taking back the entire earnings move to the downside. Banks like Morgan Stanley that had tremendous earnings, they have now pretty much V-shaped their entire pre-earnings move. Even banks like Goldman Sachs now breaking up to an all-time high after being bogged down after their earnings because the whole sector was down. So finally, a case in point in the bank earnings translating into gains. All of the bank earnings, guys, were very bullish, but they just got hit because we were in the midst of a fearful sell-off last week. So now that we're kind of through those temporary fears, financials really reflecting the fact that their earnings were strong. Now moving on to healthcare, another one of our major sectors, and healthcare has done something today, guys, that is fairly noteworthy. So take a look. We were in a daily downtrend now, guys, and we were looking, can we get above our most recent lower high of 140.62? Well, we just did it today. The bulls putting in an engulfing move. So 1, 2, 3 legs down. This third leg down was a bit soft, but it was our third leg down. And now we've engulfed that move. That gives the bulls the best probabilities at being able to reset this into a daily uptrend. So very nice move to the bulls right now. Hourly trend in full control. I would like to see them take this as high as they can, because the higher that they take this, guys, the more space they create between them and these lows right here at 138.21 gives us a beautiful chance at resetting this into a daily uptrend. And the more space we put between us and this green box, we will then be able to use this green box as support on that retest. This green box, being your prior resistance of the all-time highs, should now be acting as support, and that is where the bulls really started mounting their defense from. We are still in the context of this weekly downtrend, so if we do get the eventual daily uptrend reversal, we'll be looking how far can they carry that new daily uptrend into this weekly move. So far, the bounce on the weekly is not significant enough. You'd need to see a weekly bounce at least all the way up to, let's call it 143 up to about 144.50 to really guarantee us that now we're changing up even the weekly probabilities of a trend change. But all in all, the bounce on healthcare looking very good. Now, lastly, we're going to move on to the SMH. Well, not lastly, but of our other major sub-indexes of the S&P components. So semiconductors making a nice move of recovery today, 2.35% to the upside. Semiconductors, however, still trapped in this extended daily downtrend as a whole, right? So this is your most recent leg of selling, a quite nasty one, and there are a few areas of resistance above us. Keep in mind this yellow line right here, horizontal resistance, 213.54. And the moving averages are all there as confluence as well. This is going to be the area that's going to be very challenging for the bulls to mount above. That being said, we are putting in a somewhat of a decent bounce currently, right? You can estimate this bounce is going to be almost about 38%. So not quite there yet to really guarantee us the probabilities of resetting this into the daily uptrend. For that, guys, we really would need a bounce at least up to the 50%, which would be that 213 resistance. And if we can even get a little bit above that 216, well, that will get us back in to this range right here and gives the bulls the best chance at being able to set a higher low into the daily trend change, and that would put an end to your weekly downtrend as well, and we would really start trying to recapture most of this weekly move. So semiconductors doing a good job, but 2 days of bounce is not enough. The size of this bounce is also not enough. So if semiconductors lose the hourly time frame into tomorrow or Thursday, perhaps, we could be expecting a potential rollover, and then it'll be up to the bulls to protect these lower lows. If not, we risk setting the daily downtrend further and just rolling over further and further into weekly consolidation, which at that point, considering the fact we are in a weekly downtrend, would also be healthy monthly consolidation, similar to what we did last October. So semiconductors holding up strong, but the bulls still have a lot of work to do. Now, moving on to the IWM Russell. So our Russell 2000 stocks coming up nicely, 1.67% today. The bounce is now underway, right? So we had this nice daily downtrend going for the bears right now, and now the bulls have put in a fairly sizable move. Take a look at the size of this move in relation to our most recent lower high. They are now up to the golden ratio, right? 61% retracement. So now the bulls have a decent shot at reversing this into a new daily uptrend. Still a lot of work to do, but I'm liking the size of these bounces. Bounce directly from your 200-day moving average, so that's good. However, we are still in the context, guys, of this bearish weekly engulfing move right now, so we've lost the weekly uptrend. So to regain the weekly uptrend, the bulls have a lot of work to do. Most likely, since the bears have come down so far, the V-shape, in my opinion, is quite unlikely. We may just be looking at something like the two-step recovery process, guys, and in my opinion, it's going to be tough for growth stocks to really start lifting up significantly higher unless we get some better than expected inflation reports and unless we get some better than expected commentary from the Federal Reserve. Those two elements coming up in the next couple of weeks. Federal Reserve next Wednesday, and then we have inflation around the midpoint of May. So those are going to be the two things that are impacting the Russell more specifically. One thing's for sure, if for ever which reason we continue this rollover on growth stocks, I would be interested in taking this trade if we can come down into the 185 zone. So now lastly, moving on to the Dow Jones. Dow Jones, another sector that was trapped in extended daily downtrends over the past couple of weeks and had a fairly brutal weekly engulfing move too. So how are the bulls shaping up now at this point? Well, we are now tagging our area of resistance that we've clearly labeled out on this chart over the past couple of weeks, right? So now we're dealing with a couple of things. Our moving averages are acting as resistance right now. That's the 26 and the 50 acting as confluence right there. And we have the horizontal line of resistance too. That being said, this move by the bulls is a significant one. Now the bulls have recaptured approximately 62% of the move, which is exactly what we want to see. The best case scenario would be all the way up to 38,700. That would be a 78% retracement of the move. Gives the bulls the best chance at resetting this into a daily uptrend down the line. So if ever we get rejected from here, let's say tomorrow or into Thursday perhaps, well, we can be expecting the bulls to try and set a daily higher low and reverse this into a daily uptrend if the rest of our earnings cycle remains fairly bullish, right? So not looking too bad on the Dow Jones. The bulls really doing a great job at creating that space, but they're still not out of the woods. Still need to see a confirmed daily trend change to let us know that our weekly lows are set, and then we'll see how much of this weekly damage can we reverse in that first little move up by the bulls here. But all in all, looking very good. Looking like the Dow Jones is trying to set its monthly higher low and go for a potential further leg up. Now, whether that monthly higher low is set in the month of April or in the early parts of May, we dip a little more. That is anybody's guess, guys. It really depends on the data that we get with this earnings cycle over the next couple of weeks, with Jerome Powell speaking and with our CPI report in the month of May. That will clear up a lot of things for these markets. Now, let's move into our big tech names, shall we? So moving into Apple right now. So Apple having a healthy day of recovery, 0.64%, but fairly muted compared to the rest of big tech, right? The rest of big tech putting in very nice days, 2%, 3%, over 1% here. Apple still relatively weak compared to its peers. And I do think that has to do with our earnings that are coming up in 2 weeks from now. People kind of skittish because Apple is set to potentially miss on iPhone deliveries by about 10%, which was going to be one of their worst quarters in the last couple of years as a whole. So a lot of timidness still in Apple stock, but the stock is currently fairly priced in my opinion. My personal price target for Apple within the next 12 to 14 months is around the $200 mark. So very, very good discount. And a lot of analysts' price targets are in that price range as well, about $200 all the way up to about $230. So the consensus for the stock is bullish, but the sentiment still remains a little bit timid right now prior to our earnings cycle. That being said, our daily bounce is definitely underway now. Apple finally has a hourly trend change. It is very weak, but it is an hourly trend change. We would like to see Apple continue this movement into tomorrow and start trying to reverse as much of this damage that was done in the last week as possible. So the bulls definitely have their work cut out for them. Few levels that stick out to me. 168.50 pretty much is going to be very big resistance. It acted as support a long time throughout the month of March. So this line could be challenging for the bulls. What do the bulls need to do to recapture a lot of this move? Well, it's all in the bounce percentage. I need to see the bulls get at least as high as 171, which would be a 50% retracement. At best, we get up to the 618, which would be about $173 on Apple. If we can make a move into those areas prior to our earnings, it will create enough space for the bulls that even if we end up with a negative earnings report, we may have a decent amount of cushion here that it will prevent us from really reaching lower lows after the earnings event, right? However, if the bounces are relatively weak before then and we roll over the hourly time frame, let's say we hit this resistance with the moving average and the horizontal resistance, let's say we hit this in the next couple of days and Apple loses the hourly trend change, well, you could be expecting potentially to revisit these lows down here and maybe even challenge lower than that prior to the earnings. So it all really depends on Apple's bounce capacity now that the bounce has been started. So I'll definitely be keeping my eyes peeled on this one. I still love this stock in these lower levels. And if for ever which reason, prior to earnings or after earnings, we dip into the next level of support, which is 150 up to about 155. Your 200-week moving average is right there as well. I'll remind you, Apple has never lost the 200-week moving average in the last 15 years. This will be an extremely juicy area for the stock moving forward. So keeping our eyes peeled for the size of this bounce on Apple. Now moving on to AMD. AMD also not looking too bad, 2.44% to the upside, looking quite decent if I do say so myself. AMD has obviously been trapped in this extended daily downtrend this entire time, guys, really since its peak early March. Now AMD, the bounce has started with AMD as well. We do now have an hourly trend change to the bulls. It's looking fairly weak. Today was flat, but it is an hourly trend change and it is a daily bounce underway. That being said here, guys, today, what we need to look out for is, Can the bulls get enough continuation on this bounce? So far, the size of the bounce is not enough in my opinion. It's only about 38% of the move. That is just not good enough. Couple that with the fact that we have overhead resistance, this green box right here, prior support. That's now going to be current resistance, right? So can the bulls potentially get rejected in this area? The moving averages are there. The horizontal resistance is there as well. Very possible we get rejected, but I would like to see us come up as high as possible into this area before we get rejected. And that would mean that we would need to get up at least to about 161. If we can get up to 161 here, guys, it gives the bulls the best chance at reversing this into a daily uptrend. And then, of course, we have earnings on the 30th of April. That is going to be next Tuesday, guys. So price action could be fairly muted until that time. That being said, I'd like to see the bulls put in enough space between us and these lows that in the event earnings is not as fantastic as people are anticipating, at least we have somewhat of a decent cushion, right? About roughly 12% between us and the lows. That would probably be enough to really protect these lows in the event that we start revisiting them. So nice little bounce underway by AMD, but still just looking for a lower high at this point. And keep in mind, we are still in an extended weekly downtrend and an extended monthly consolidation too. Gorgeous monthly uptrend. This, in my opinion, if we do come down to 140, let's say we hit 140 post earnings, could be a very juicy area for a swing trade on AMD stock. That would be your monthly 12 EMA, looking for the monthly higher low for further trend expansion once that semiconductor trade really becomes popular again. And that probably is going to happen within the next month or two. Now moving on to Amazon at this point, give me a quick second. All right, so moving on to Amazon. Amazon up 1.3%, looking fairly good, recapturing the 178 level. Amazon with earnings next Tuesday as well. So not too many days of trading left for that company as a whole. Now, where are going to be the key levels for Amazon stock moving forward in the short term? Well, obviously, guys, we have a huge area of support down here, right? We all know that 173 down to 179. That is a huge prior area of support for the market on Amazon and will be acting as that first line of defense for your bulls. So currently, Amazon had lost the daily uptrend that was clear as day, flush of these lows right here. Now we're expecting potential lower high, and then it remains up to the bulls to see can they protect this lower low and save the daily downtrend. As of now, it's just daily consolidation and a loss of the daily uptrend. Daily downtrend would be lower high into lower low. So the bounce is now underway for Amazon. We now have the hourly time frame shift once again, similar to the rest of our markets. Now we'll be measuring the size of the bounce in relation to our consolidation. Get me as high as possible, and as high as possible by as high as possible, I mean at least 184. If we can get back up to 184, it creates enough space for the bulls that prior to earnings, we've created enough space that even if earnings are underwhelming, let's say we get up to 184, well, it gives us a lot of room to move, guys, a margin of error of about 6 to 8% before really low losing these levels, which are your weekly levels as well, right? So that's where I'd like to see the bulls get positioned before our earnings to really give ourselves enough cushion. But as of now, Amazon's still looking quite decent. Our weekly levels are protected as well. You can see this here, gorgeous weekly uptrend as of currently, and we are still above our weekly higher low, which is the 171.88 at that point, right? And then you obviously have your lower protection down here, but the bulls are doing a great job right now, guys, of protecting this extended weekly uptrend. So let's just see how Amazon stock performs over the next 5-6 trading days, moving into their earnings. I am very bullish on this company for the year and also for their earnings as well. I think it's going to be one of the best performers of all tech stocks. Now, moving on to Google. Google up about 1.25%. Very good day for Google as well. So Google has been in the context of this beautiful daily uptrend this entire time. And then something happened last week. We lost the daily uptrend, set a daily downtrend for one day, and now the bulls have recaptured that control. So looking very good. It was very choppy in the last week of trading. The time frame that does Google the most justice is undoubtedly the weekly time frame here, guys, right? Beautiful weekly engulfing move. We were in a weekly uptrend. We lost the weekly uptrend, series of downtrends here over the month of January and February, and now explosion to the upside any move lower, just looking for weekly higher lows for further trend continuation. So Google stock is looking very good on the weekly time frame, my favorite time frame for the stock. That being said, they have earnings on Thursday, guys. So price action, expect price action to be fairly muted before the Thursday earnings. I do expect Google to deliver fairly good earnings as well. The valuation of the company is relatively attractive, even though it is close to all-time highs. It is one of your cheaper valued stocks in terms of big tech right now. So looking very good. Price action before the earnings, guys, it's really anybody's guess, right? In my opinion, we probably maintain somewhat of within these bounds right here, 160, 152 and the 154. I don't really expect Google to break either of these levels in a significant fashion before earnings. Earnings will really send it either way. Obviously, positive catalyst to the upside would just be bullish break to the upside, daily trend confirmed, and just continuation of this weekly uptrend as well. Right? And to the downside, if we do break to the downside here, guys, well, Google has a ton of cushion on the weekly, right? Any pullback on the weekly is just going to be looking for a weekly higher low for further trend continuation. If we do dip after earnings, guys, 150 down to about 145, this whole pocket right here, that would be a sell-off for Google of roughly anywhere between 7 to roughly 10%. I'm not expecting that on the earnings directly, but let's say the market as a whole just kind of tapers off because the bulls haven't really changed the daily downtrends on the indexes, right? So let's say our indexes roll over for a leg of sell-off number 2. Well, if we ever see Google back down here, 150 to 145, that's where I'm going to be building some swing trades and maybe even adding to my long-term shares positions. Moving on to Meta now. Meta kind of same thing as Google, right? Meta has earnings literally tomorrow after the close. So the price action on Meta should be fairly muted. I'm not expecting them to lose these levels before earnings, which will be a flush of weekly levels, right? This is going to be your weekly higher low levels, gorgeous weekly uptrend, and these are the weekly higher lows that we're dealing with right now. I'm not expecting the bulls to lose these levels before earnings, just the same as I'm not expecting the bulls tomorrow to break the all-time highs before earnings. Earnings will set the tone for Meta. One thing's for sure, one of two things is going to happen, guys. Either earnings are going to be a flush and we're going to continue this daily downtrend, lose our weekly levels, and get plunged into weekly consolidation, which will also coincidentally be monthly consolidation at the same time. All of those healthy conditions, mind you. And if earnings are a complete blowout to the upside, such as we saw last time, well, you guys know what we're expecting. Breakout to the upside, guys. And at that point, your resistance will be targeting over the course of the quarter is going to be that 550 mark. And that'll just protect all of these weekly higher lows. The weekly uptrend will just simply continue. So keep our eyes peeled on Meta tomorrow. Meta is supposed to be delivering very decent earnings as well. Record profitabilities, record free cash flow. It'll all depend on how much money are they spending on the metaverse? The company is burning roughly, $10 billion a year on their metaverse endeavors. So if ever that spending has increased significantly since the last few quarters, Meta has had record profits. If they are spending more of those profits into the metaverse business and losing more money, I don't think that Wall Street is going to be very pleased with that. But their advertising business, in my opinion, should have done well over the last quarter. Now, moving on to Microsoft. Microsoft also looking very good today, 1.65% to the upside. And Microsoft doing exactly what we want to see it do before our earnings. So earnings on Microsoft Thursday. So as I said in yesterday's video as well, the price action on Microsoft, guys, is probably going to be fairly muted prior to your earnings release. That being said, the best the bulls can do right now is give themselves enough space. This is a daily downtrend right now. We're currently in the process of trying to set in an engulfing move to eventually set a daily higher low to reverse this daily uptrend. Obviously, before our earnings, we don't have time to do all of this, right? So we won't get a confirmation that the bulls are in control much before our earnings. Earnings can send this stock either way. One of two things is going to happen, of course. Either we're going to regain daily control by blasting above here, potentially getting a daily higher low using the higher end of this support range as support and all the get above the moving averages again. Maybe we can see something like this, right? That would be best case scenario and would be sending Microsoft into new weekly uptrending status as well. However, if we get a break to the downside because earnings are underwhelming, well, your daily downtrend simply continues at this point. Your weekly consolidation simply continues too. And then we look to the lower levels since we'll be in monthly consolidation at that point. Our next big area of support is going to be 375 zone, 375, 370, this whole pocket down here, and I will be extremely interested in playing Microsoft if ever that happens. So let's keep our eyes peeled for the earnings on Microsoft. In my opinion, should be a very good quarter for them, but if ever the expectations were too high for the company, maybe if they come in with underwhelming guidance, that could be the one thing that Wall Street may have a little bit of an issue with, which is one of the only reasons why the stock may be red. Because as a whole, guys, Microsoft usually never misses earnings. All of its lines of business have performed very well over the past 1 and 2 years. Now moving on to Netflix. So Netflix also not looking too bad today. Very beautiful recovery, 4.17% to the upside. Doing a great job here, guys, of trying to engulf some of this earnings move. So where does Netflix stand right now? We are still in the context of this daily downtrend as a result of the earnings drawdown. Now the bulls have the bounce underway, clear recapture of the hourly time frame. So what we want to see is the bulls get enough of a size of a bounce that we can maybe try and set up for the daily trend change and try to reverse the damage that was done after earnings. For that to be the case, we need to get a bounce at least as high as the 618 level. 592.50 would be the best opportunity for the bulls. If we can get back up there, we may get rejected by these moving averages, and we may get rejected by this huge zone of prior support, which is now resistance around the $600 mark. If that happens though, if we can bounce all the way up here, even though we'll get rejected, we'll be doing a few things, creating enough space to possibly set the higher low into daily trend change, and we will be back above a crucial zone, which we broke above back again now today, which is your 575 prior resistance. We're now back above that. So all in all, Netflix looking quite decent in this second day of bounce after earnings, but the bulls have not done the work yet, guys. We are eventually expecting the lower high, right? And then it'll be up to the bulls to reverse this and set the daily uptrend. Looking good on Netflix, but if ever the market doesn't cooperate as a whole and we roll over into lower levels, I will be trying to play Netflix 520 down to about $500 as a whole. Now, moving on to a few last ones here, guys. So we're going to do NVIDIA. So NVIDIA not looking too bad either, 3.65% to the upside. Very nice day of recovery for NVIDIA, but we are still dealing with a few levels of overhead resistance. Take a look. Your moving averages are all the way up here, and your 850 horizontal prior line of support, that will now be resistance. So this is a big area of confluence for your bears, right? They could be mounting some defense here, and then it'll be up to the bulls to really try and reset the daily uptrend. As of now, NVIDIA still in daily downtrend mode and still in weekly extended consolidation move after such a healthy leg up. We are now trying to set the weekly higher lows to continue this weekly trend expansion. So the bulls are not out of the woods yet, but they've done some great work so far. Now we have bounced about 50%. I would like to see it all the way up to the 61% mark, which coincidentally is our area of confluence. It's this area right here, 850, the moving averages as well, right? So if NVIDIA bulls on this daily bounce can get above this level, that would be best case scenario. We could then use this level as support, use the moving averages that will be above at that point as support, and try to reset this daily trend. However, if we kind of fail at this attempt right here and the markets roll over as a whole, guys, well, then we will be revisiting these lows. And I still think that this 750 all the way down to 700 level is an extremely attractive level to be playing NVIDIA for the near and long-term future. So looking good. The bulls have now completed a decent step. It just remains to be seen. How high can they continue this bounce? The higher that they continue it, the more certain that we can be that this is your new weekly higher low and that we are on for further trend continuation. Now, moving on to Tesla. So Tesla had earnings today. And as a matter of fact, guys, I won't be doing the Tesla earnings today, but Tesla missed on everything. They missed on earnings. They missed on revenue. They missed on free cash flow. The only thing that they got positive was they had an increase in margins. But that's not the increase in margins is funny, guys. It's not because they increased the price of their cars. It was actually a result of reduced capital expenditures and just a reduction of the supply chain costs that the company has. So think of the price of raw materials, the price of electronics. All of those have come down significantly over the past year. That's a byproduct of inflation coming down, but also as a byproduct of management getting better and better deals with suppliers. So a bit of a double-edged sword, right? The margin increased, but in my opinion, not for the right reasons. And I only say that because we were already expecting the supply chains to be better, right? So that would have already helped margins to begin with. The rest of the margin needs to come from their ability to maintain purchase pricing power, and that only comes once they can start increasing the price of their vehicles again as a whole. Once again, I've said it a number of times, guys, it's not a Tesla problem. It's an overall auto industry demand problem right now because of the product, because as a byproduct of higher rates. So Tesla, as a matter of fact, in the after hours, you can't see it right here, but let me put those on the chart right now. Tesla up a very healthy 10%. So great little relief rally by them. The reasons for the relief rally, well, once again, they hinted at their new models coming out. So think robo-taxis and think cheaper vehicle around the $25,000, $30,000 mark. They say that they are targeting those two things to be rolled out in 2025. But in terms of, was there anything in this earnings report that had immediate impact on the stock's ability to perform better in the near-term future? Not really, guys. There wasn't really much in this report that hinted to any short-term recovery whatsoever, but any positive news at this point is good news for Tesla because people were just waiting for good news, guys. It's been literally 3-4 months of just constant negative news at this point. So it's nice to see that positive news at least was received well by Wall Street, and that despite missing all or most of all their financial metrics except for margin. So very nice recapture here by Tesla. We're now back in our range of support. We were getting dangerously close, guys, to the lower 130s. And now with this earnings bounce back up to 150, we're starting to take back a lot of this daily bounce or a lot of this daily leg down of selling, right? So obviously Tesla has been in a daily downtrend at this point for quite some time. This bounce up to roughly the 160 level, well, what does that do for them? Does that create enough space? Well, you'll see, guys, not really. And I don't mean to sound like a Tesla bear right now. I mean, I own long-term shares of the company. We just got to say it how it is, right? The size of the bounce at this point at 160 is only about 50%. That does not guarantee that the bulls can convert this into a new daily uptrend. And keep in mind, this whole 160 level is overhead resistance too. So if ever we get rejected at this current point and we sell down after the earnings euphoria into tomorrow, perhaps, it's up to the bulls to set the higher low into the daily trend change. Once we get the daily trend change, and only once we get the daily trend change, we can say most likely these weekly lows are set, and then we can try and attack for the new weekly uptrend over the rest of the second half of the year, which would be much better for Tesla because that's when the period where interest rates should be coming down. Obviously, that's not going to stimulate demand for the company immediately, but it's a step in the right direction. So Tesla's still in the bottoming process. Very curious to see how the stock opens up tomorrow, and then what and how high in relation to this move right here can we get. The best case scenario, guys, is this earnings positivity maintains and we get at least as high as 163, at best 170, guys. If we can get back up to around, 168 to 170, it gives the bulls an amazing opportunity, guys, at reversing this into a daily uptrend, really setting the weekly lows, guys, and starting to recapture this into a weekly uptrend and really start turning around the company as a whole. So looking fairly good. Keep an eye on my video that I'll be dropping later tonight. We'll be doing a deep dive into those Tesla earnings. Now, moving into Palantir right now, Palantir up a healthy 3.2%, and in the after hours, up another 1.5%. So all in all, very healthy. I did not see if there was news on Palantir in the after hours, but very nice participation by Palantir today in the markets. So Palantir, obviously in the context of this daily downtrend, just looking for a lower high, and then it's up to the bulls, depending on the size of this bounce, to set the higher low into daily trend change. If the bounce is too weak, we'll just roll over. At this point, is the bounce strong enough? Well, the bounce size is about 50%, guys, so really not that bad. Palantir putting in a hefty size in terms of the bounce. I would like to see one more attempt at attacking these above moving averages here and pulling up into the almost $23 handle. If we can get a little bit more here, guys, I'm pretty sure that the bulls will be able to convert this into a new daily uptrend after playing such good defense in these lower levels. That, right, if we can get the daily uptrend back, well, that would be a bottom to our weekly downtrend right away. And then we'll start attacking this leg of weekly selling to try and reverse that as well into a new uptrend and start really attacking this $28 level in the second half of this year. So far, $21 down to $19, still my favorite area currently of support for the bulls. So I will continue to be looking to build a Palantir position. As long as we remain between 21 and 19, I will keep trading Palantir aggressively and maintain building a shares position to follow this company's expansion into the later part of the year. Still one of my favorite pure form AI plays. Now moving on to PayPal. PayPal also with a very healthy day of recovery here, guys, today, 1.96%. So PayPal now putting in an engulfing move. Take a look at this, right? So daily downtrend was set. Now we were looking, can the bulls put in enough of a move in relation to $64, which was our most recent lower high? The bulls have now engulfed. So that really gives them the best opportunity of continuing this move and resetting into a daily uptrend. We're also above a couple things right now as well. Now clearly back above all of our moving averages, including the green line, which is your 200-day moving average. And with this daily engulfing move into a potential daily uptrend, it could just signify, guys, that PayPal's weekly lows are set and we may just be ready for another weekly leg higher. In my opinion, guys, it's not going to be PayPal's doing if that does happen. PayPal has earnings pretty much next Tuesday as well. So price action will be fairly muted before then. That's what I meant to say by that. And if ever the rest of the market, guys, rolls over and resumes bearishness, because we are still in daily downtrends on our major indexes and a lot of big tech names as well, if market bearishness resumes, well, PayPal will not be safe. In my opinion, we will start reverting to the $63 to $61 area of support between these two yellow lines. But in my opinion, guys, a breakout of these highs prior to earnings is quite unlikely. And similarly, I don't believe a break below 61 is very likely before earnings as well. So we'll keep a close eye on how the company does after earnings, because after earnings is really going to be the tell if we can come up as high as these highs, guys. If we come all the way up there, I do really believe that PayPal is on its way to a breakout towards 75. And unfortunately, if earnings are underwhelming, well, it'll just be another buying opportunity to maybe pick the stock at some lows down here at around the $58 mark. So very excited for PayPal. So that's pretty much everything I had for you guys in terms of stocks today. Now let's take a quick glance into my portfolio to see the trades that I made over the course of the session. All right, guys, so let's take a look at the earnings plays that we've been making over the course of this week. Yesterday's trades were all fairly good, except for Nucor Steel. The market makers really played some games with me on the premiums for that stock today. But for the most part, guys, fairly muted day in terms of our earnings yesterday. We generated a lot of premium yesterday, and I will be doing a weekly total at the end of the week. But in terms of all or most of our contracts, right, the General Electrics, the GMs, the RTXs, right, the Raytheons, Spotify, and UPS, you can see the value of these contracts in the end of the day have now become worthless. That's just a byproduct of the strategy that we're running right now, guys, right? How we're writing 2 standard deviations of the expected move. If the earnings expected move is 5% to the downside, we are writing 10% below that or even lower. And that's going to give us some very good cushion in terms of margin and error, and also gives us some fairly juicy premium. So all in all, over the course of yesterday, guys, we made roughly about $200, but I did give about $150 of that back to Nucor. Nucor, guys, was a case in point into, just market makers really playing games with the premium. So I had the 177.50s and I had the 172s as well. So I was fairly below the expectation for the stock. That being said, guys, when we opened the morning, we opened it at around 180, 181. Nice little spike up into here. So you would have assumed that the ones that I had down here, these contracts for Nucor, the 177.5s and the 172s, at least some of the premium would have evaporated from those positions as the stock price was above my strike prices, especially these 172.50s. However, this entire time over the course of the first few hours of the morning, guys, the market makers were not willing to move on the premium at all. Even though the stock was in the 180 level, the premium was significantly higher than where I wrote it. So I had to take a loss on the position. When I was seeing that market makers weren't removing the premium from these contracts and keeping the premium, in my opinion, way too elevated. It was very funny what happened today. The premiums were elevated here, and then while the stock was dropping, you would expect those puts to get even more expensive. As a matter of fact, they didn't. They stayed roughly flat from 180 all the way down to roughly 178. And at that point, I saw it coming, guys. I saw that the market makers were kind of playing games. I checked the open interest on the options, and seems as though there was so many puts written in the 175 level. Maybe the market makers are just looking to take those for the week and really make people close worthless. This stock is not traded that often in terms of options, so would not surprise me that there was a slight little bit of market maker manipulation on that chain specifically, but not trying to make an excuse whatsoever. That is the nature of the strategy. So we did come out slightly profitable, but not as profitable as I would have liked. All in all, though, still a great day. Lots of great plays. Most of them, all of them except for Nucor pretty much, ending in the green. Very, very easy trades. Now, we do have some more trades lined up for tomorrow's earnings. So let's take a look here. We have some end phase. We did the 82s and the 85 puts so far away from the strike, from the current stock price here, guys. So you can see end phase, right? Trading before the close around the 115 mark. We wrote literally in the 80s. You guys saw that, the 85s and the 82s, right? That would have been a drop of roughly 25%. The expected move on end phase was about 10%, and we went so low, guys. We went 26% off. You can see here, I got 23 cents for one of them, and I got 39 cents for other them. Well, now that end phase is about 106, these will be worthless tomorrow. We are still in the Pepsi one that we had from yesterday. Pepsi earnings were underwhelming. The stock is trading about 172 right now, so I'm probably going to maintain these for another day or two. The time decay on these is quite aggressive at about 15 cents per day, so I should be able to close this one at a profit over the course of this week as well. Then we did some Tesla plays, guys. I told you that I wasn't going to do some, but I looked at the premiums and I found somewhat of a kind of risk-free strategy, making a bearish play on Tesla. So as a whole, guys, you can see that I did a couple things. So number one, I bought a Tesla Friday put for about 125. That was roughly twice the expected move, right? Well, just under twice. The expected move on Tesla was about 9%. This one was about 12% away, 13% away. And I was willing to take this risk, guys. I got this for about $1.20. So if Tesla would have came under 125 by Friday, this would have made money. Now, I counterbalanced this put by selling some puts considerably lower. Take a look at these strike prices. 100 put for Friday, I got 14 cents for that. Not bad, considering this will be worthless tomorrow. The 103s, I got 20 cents for them. Not bad, considering these will be worthless tomorrow. And I even wrote next Friday 95 puts, guys. Tesla was at 146 prior to those earnings, right? So I wrote the 95 puts and I got 24 cents for them for about a week and a half of trading, but these will probably be worthless tomorrow as well. So all in all, guys, we collected 44 cents plus about 14 cents here. Let's call it around 58 cents, right? Which is roughly half of the size of my put contract. So this put contract, in all reality, with this premium received, right, the 120 bucks minus the $58 that we received in credits really only cost me $60. And that's considering that this is completely worthless tomorrow. I'll probably be able to find some salvage value on this contract, right? Maybe I'll be able to get 20 cents back, 15 cents back on it tomorrow at the open. So all in all, it didn't cost me much to play this trade, but we really didn't make any money on it since Tesla did outperform. That was just a slightly leaning bearish strategy. But as you can see, guys, I went very, very, very conservative with my Tesla. Really a case of I was hoping for the best for the company, but I was expecting the worst. And happy to see, though, that they did outperform. Didn't really cost me much in any way. Now, TSM covered calls, we still have those on, so we'll probably be called away on TSM by Friday. Very happy. My average cost on TSM is about 128. We'll be called away at 130, so we'll make about 200 bucks, which is about 1.5% in about a week of trading. We got assigned on these as of last Friday. Good position as well. Then we wrote the, we did some TXN for earnings, right? Texas Instruments, the 152.5s. So Texas Instruments, the logic behind that one, 152.5 was really at the bottom end of my range of support and was further than the earnings expected move. Texas Instruments after the close right now, I'll move myself over. You can see Texas Instruments of about 6.67%. So we were able to get some juicy premium on this one, 32 cents. That will be absolutely worthless tomorrow. And then we did some visas as well, 2 visa contracts. After American Express blew it out of the water last week, I thought that this was a very easy trade to make. So we wrote the 260 puts, got 52 cents on those. We wrote the 262.5 puts as well for this Friday. We got 80 cents on those. Those were below the expected move for Visa as well. The expected move on Visa was about 3% up or down from the close. 3%, 3% directly would have been about 266. So I did go a bit below that. We went with the 260s and 262.5s. Not that much volatility in Visa, guys, and even the 260 range would have been a very juicy level in terms of a trading opportunity anyways. So I was willing to take the gamble on those Visa earnings, and they played out perfectly. Those 2 contracts should be worthless tomorrow. And then tomorrow morning, we do have the VRT. VRT, very strong stock. We wrote these 63 puts. We got about 24 cents for those. Very happy with the premium received, considering the fact that VRT tomorrow, the expected move is about 9%. And take a look here, right? We are all the way You can see this contract $63. So from current share price, that is about 20.5% away from current share price. It is in line with one of our previous weekly support areas as well. Company is supposed to do extremely well, expecting good things from them. But even if they do miss, guys, I have a 20% cushion, and that would be a pullback from the all-time highs of about 30% total. So I am willing to take that gamble, especially only with one contract on such a solid company. So the moral of the story, guys, is you can see that I'm only playing really solid companies. And even for the ones that are kind of unfavorable in today's environment, right? Solar plays, Tesla, EV plays. I went so conservative on them, guys, that there's really wasn't much risk involved in the play to begin with. So hopefully that was good in explaining. I should be making a decent amount more money on these plays today. We could just do some math on them today, right? These two end phase contracts. So 23 plus 39, plus 39 right there. Let's do the Teslas as well. Plus 14, plus 20, plus 24, minus the Tesla call. Maybe we get 20 cents back on that value. So I'll probably lose maybe $100 on there. So now we're down to 20. And let's do some more math. We got the Texas Instruments. We got the two Visa contracts as well. And we got the VRTs. So it should be about $200 that we're looking to collect from today's very, very safe earnings plays as a whole here, guys. That's why I did them, right? So looking very decent. And then obviously, of course, we still have Pepsi on the table for about $40 of premium as well. I didn't include that in the calculation. So all in all, looking very decent in terms of performance for the week. And then tomorrow, I'll be probably doing even more put option plays, more specifically probably on Meta, maybe some IBM. I may try and do Ford, ServiceNow, LRCX is a bit too expensive as well. These two companies have high share prices. And then Thursday before the open, not too sure if I'm going to play any of these except for maybe Altria and Caterpillar, two of my favorite companies in their respective divisions. And then on Thursday, we're definitely going to hit Microsoft, Apple pretty hard. And then on Friday, guys, I may do a few of the oil plays, and AbbVie I definitely will be playing, maybe even some HCA. So I'll be playing a lot of these earnings plays over the course of the week here, guys, looking to generate as much premium as possible over the next 2 weeks by staying relatively safe, giving myself a wide margin of error for most of these trades. So we'll continue updating you guys every single day for this trading strategy. This is one of the few occasions, guys, where I'm not running the wheel strategy directly, meaning staying in companies from Monday to Friday. I'm really just looking to stack as much premium and rotate the positions as frequently as I can, rather than, you know, because this week is so volatile, right? And because of the fact that overall the indexes still are kind of in daily downtrends as well, right? The bears are still in control, even though it's been a nice bounce. I just don't want to take any chances, guys, on writing puts on a Monday and then have the market fall apart because of a few bad earnings reports or bad sentiment or potential Israel-Iran furtherance of news, right? So that's why I'm kind of playing this more, you know, in certain aspects, it's a more aggressive strategy, but also in the aspect that I was just discussing, it is a more safe strategy in terms of that because we have so much cushion to the downside, right? So hopefully all of that was educational for you guys. Looking very decent for the week. Can't wait to generate even more premium. So hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing to the channel as well. We do these daily market recaps every single Monday to Friday. Hopefully you guys are enjoying them. And lastly, if you have any questions at all, guys, feel free to leave them down below in the comments and I'll get back to you within the first 24 hours. So take care, guys, and peace.